as an essential service over the last couple of months. So good luck to you and your platform. Right. Next up, we have Triangle Energy, ASX code TEG. It's got a market cap of around 10 million. We have with us the Managing Director, Rob Towner. Triangle is an experienced oil producer, an explorer with operations located in the Perth Basin. Over to you. Thanks, Rob.
Thanks for that. Welcome, everyone. And thank you, Tim. That was very interesting. I suppose I should start by saying we're moving from barrels of wine to barrels of oil, perhaps. So Triangle Energy, we're based in Perth, Western Australia, obviously. We have a production facility at Dongra, north of Perth. On the covering slide there, you'll see the offshore platform. It's an unmanned platform. In the middle is our onshore processing facility. We've named Arrowsmith, and the helicopter is part of our logistics chain, and that's currently, as you see there, it's on the platform. Next slide, please. The company bought into Cliff Head in 2016 at a time of low oil prices, and obviously we're seeing that at the moment. That was a strategic position that we took as a board. We'd been operating in Indonesia with a gas project and had sold out of that and had cash in the bank. So it was a regrouping, and the strategy was to buy production, and the Cliff Head asset was available. We currently have 360 million shares on issue. At our share price of 2.9 cents, we have a market capitalisation of 10 million. Cash at the last quarterly report was 4.1 million, and there is 1.6 Aussie in Indonesia as part of the sale completion in the gas asset. We also have a significant investment in ASX listed state gas. We have a position in that that's worth $17 million. There's a quick summary of our last 4 quarters of production, ranging from 700 to 800 barrels a day. And again, looking back over the time at $60 oil US, which is, it's been 50 to 60, it's generated on a 12-month annual basis revenues of between $1 million a year. Our board, I think I may have been muted, now I'm back, am I? Our board, 4-member board, Tim Monckton is our non-executive chairman. He's in the finance industry. Ted Farrell, again, has been in the investment markets for a number of years. And Wei Li Wong is the chief executive officer of a Malaysian-based oil and gas company. His background, professional history is oil and gas operations. Next slide, please. I guess we all know about COVID. We've got this slide as part of our quarterly presentation. I think what I would say here is that, as we all know, everyone's been affected. For us, this does bring attention to the company and many mining and oil and gas companies with the regulators. So we've met all of our regulatory requirements. We've had what would be called probably an informal audit, and the outcome of that has been outstanding in that we had no boxes to tick. We'd covered everything off, so we've been very happy with that outcome. And it's always viewed by the company that these occurrences are actually a good situation to look at and reassess how things like your health, safety and environmental procedures are working within the business. Next slide, sorry. So the Cliff Head oil field, it's 270 kilometres north of Perth, just off the coast of a farming town at Dongra. Well, farming for both the traditional agriculture, but also a very large crayfishing industry. The water depth is only 20 metres, and onshore we have our stabilisation plant where we separate the oil and the water. That facility can process 15,000 barrels a day, so there's certainly excess capacity for any new discoveries that may be made onshore in the Perth Basin or offshore, which I'll refer to later in the presentation. Production's from 5 wells. There's 3 water injection wells. We've recently, in the last 2 years, we started the Cliffhead Renewal Project. This was one of the reasons for buying into this field. The field's been in production for a number of years, but there's been no new discoveries or no new development programs initiated with the previous owners. And we saw that as the opportunity, given that the infrastructure is in place already and significant. So I'll go into that, and what we found from that is that we've got 3 priority drilling programs. This was recently announced in the last 4 or 5 weeks. So moving forward, it's very much the business of anyone in the resources game, is that you always need to try and extend your reserves to enhance ongoing production. We see the infrastructure that we own and that is in place in a very much underexplored basin in Australia as a really a large opportunity. In terms of our production, yes, we're doing about 800 barrels a day. You can see here there's been a change on the 1st of January this year in regard to the sulphur content for offshore shipping and the oil that they use. As a result of the production that of the oil that we produce, we're now getting an average increase on the above Brent oil prices of about $2.80 US a barrel, which is a great outcome in that it's not something expected, but it's extra revenue for us. Next slide, please. So where we're at the moment, and I don't think anyone's any different. Everyone's had to make changes. Everyone's had to adjust to address the slowdown in what's happening in the world. To give some perspective, when we bought into the field, the lifting cost, which is the bottom blue area on both slides there, was about $45 a barrel US. At that same time, this project was receiving approximately $35 to $38 a barrel. I guess that may be one of the reasons it was for sale. We've managed in the last 3 years to restructure all of our lifting costs through new contracts and new service providers. And we managed to recently, up to March this year, it's been averaging about $27 a barrel. The red line's the trucking component. And since the last 2 months with COVID-19, we've made significant changes, particularly in the lifting, through renegotiations with our suppliers. So we've currently, between now and June 30, our lifting cost is $15.40 a barrel. We will obviously assess that again at June, and combined with the fact that we will be doing our next year work program and budget, and we'll be assessing, how we can maintain some of these renegotiated supply agreements. Next slide. So with that in point, our main suppliers for office, obviously, but marine services, air service, transport, are all West Australian-based companies. We have a very strong relationship with them, hence the ability to act quickly in this circumstance is to our advantage. Remembering that Triangle on this field, we're not one of the major oil and gas companies in the country. We are one of very few small oil producers that are listed on the ASX that can generate, as I said, $20 to $24 million of revenue. And that is what we have to manage. And it's very much like any business, we have to have good relationships with our vendors of the various services that we wouldn't take on in our own right. Next slide. So part of the infrastructure, the Arrowsmith stabilisation plant was built and commissioned, in 2006 at a cost with the platform of $326 million. It's one of 2 processing facilities in the Perth Basin, the largest. The ability to process 15,000 barrels of oil a day in this infrastructure is valuable. I guess there's a alignment between currently 800 barrels and 15,000 barrels, and there's only one way to fix that, and that is for companies and governments to support exploration into discovering more conventional oil within Australia. I do note recently a lot of discussion about the federal government reserving oil in the US. I also note the amount of money, which I'm not against, but is certainly directed to renewable energy. And I do have the question as to why we have these two arguments, and yet in the middle of it, we have a very, very efficient oil and gas sector and resources sector in Australia. So it's how we move forward as to how we can promote that message, because Triangle, with this facility, can obviously move forward to define more producible reserves at Cliff Head, but also service any other discoveries on shore. And for those who are not aware, the Perth Basin in the last 3 years has had a huge success in new gas discoveries, and that is the result of only one reason, and that is people are actually going ahead and drilling a hole in the ground to find it. There's no other way to do it. So I'll go to the next slide, but I'll just quickly, so our production is trucked to Kwinana, which is just south of Perth, to BP. So since acquiring our interest in Cliff Head and the surrounding the strategy of our infrastructure, we've participated in 2 other projects within the Perth Basin, all within a 20-kilometre radius of Arrowsmith. We drilled a well with our partners at TP15, which is 12 kilometres onshore. Well, it's right on the beach, south of Cliff Head and Arrowsmith. That was declared a discovery. We've completed further 3D seismic and have identified, in addition to Xanadu-1, 2 other potential prospects to drill. And we've also entered a farming arrangement with ASX-listed Key Petroleum to develop and run a seismic program to identify further opportunities on their onshore oil field, which Mount Horner has in the past been a production licence. So the Cliff Head Renewal Project, which is our main driver now, we have our existing production is very much in control in terms of the cost base. We've invested about $4.4 million in our infrastructure in the last 10 months. Now we need to go and discover and develop drilling programs within Cliff Head. As a result of this, we've got 3 key important potential targets: Mental Up Dip with 5.2 million barrels, the West High Appraisal, which is 1 million barrels, and Southeast Nose is 1 million. You'll see in the middle of the map the blue CH denotions, which is the existing Cliff Head wells. There's 5 producing wells and 3 water injection wells. The Mentel prospect, which is the orange just to the right of the middle, targeting 5.2 million barrels, that can be drilled from our Cliff Head platform, and as can Southeast Nose and West High. Part of this program will obviously need to be completed in terms of, that's our focus for the next 6 months, and we'll consider the financing options. We're in a good position in that Triangle owns 78.75% of the equity in the Cliff Head project, which gives us good flexibility to consider all types of options in terms of potential partners to come in. And that will be our process over the next 9 months, 12 months to establish completion of the program and how we proceed to complete that drilling. So with those prospects combined with our existing reserves, TEG's share is about, just a bit blocked, I can't see, it was approximately 7 million barrels of oil. To put in perspective, the Cliff Head field to date has produced approximately 15 million barrels of oil. So if we can replicate that and create another 7 to 8 years life within that field, it's a great outcome. As I say, the revenue per year at these levels of production is 24 million. So the leverage on both increased production and from these current market conditions for oil any oil price increase, the leverage is quite significant. I think the big thing comes back to with what I started. If Mantell was to be successful, or West High or Southeast Nose, the path and the return to market for that oil is quick. It can be gathered straight into the Cliffhead field. We have a pipeline that runs fluids from 12 kilometres offshore from the platform onshore to Arrowsmith for processing. So simply put, we won't be needing to build another facility, and that obviously makes the purpose of looking for these opportunities more important. So getting to our other two projects, Xanadu, which is just south of Cliffhead. You'll see on the map, Cliffhead's in the middle, and just to the south was where we drilled Xanadu 1. It was an interesting program. That well was actually drilled from the beach. We had a pad built at the beach, and it was a horizontal well approximately 1 kilometre offshore. We had the discovery there. We've recently run 3D seismic, and it's in addition to Xanadu 1, whilst the oil in place was not as much as we would hoped, it has identified 2 other large structures to the west, Xanadu West and Xanadu South. So the intention now with the joint venture partners is to plan the next 18 months for Xanadu. Again, the reasoning behind this, why did we do it? It was another opportunity that until we drilled it in 2017, not much had been drilled. So again, if you put the programs in place, and that you will find some oil, you'll have some misses, but this is the opportunity within the whole Perth Basin for us. Mount Horner. Mount Horner is a field that again has been in production in the past with low oil prices back around 2014. It was closed in. And then the owners at the time have sold that to Key Petroleum. We're preparing seismic programs and work programs for the next 12 months to run seismic, but as you see again on the maps, there are a number of targets there. And again, no work's been done for some time, so we're looking forward to that program too. So out of our direct management or control, we also, Triangle had a gas lease in the southwest Bowen Basin in Queensland, and upon the time of acquiring Cliffhead, we took the view that we would rather have a very focused portfolio that we were operating or partnering, and Queensland at the time and gas was not our main strategy, so we floated the project off into an ASX company called State Gas. We own 32.7% of that, which is worth approximately $17 million. In total, the company's raised about $10 to $12 million, and the success has been more than outstanding. For us to fund and have an equity of 32% and have management in Brisbane who run this separately to Triangle, the formula has worked. The staff and the group there are focused on Queensland. We've got to the point now where we have drilled 3 wells and production testing is underway with the view of defining how much gas we have there. So getting back to Cliffhead and where we are, I mean, in summary, we've reduced our lifting costs significantly since we bought into the project. We've completed our subsurface review for the Cliffhead renewal. Our lifting cost in this current period of the COVID-19 scenario is down to $15. And looking forward, we're really looking to unlock other oil opportunities with our joint ventures. And on the back of that, we hope to be a much larger company. And you know, I think at the moment we're one of very few, well, I know we're one of very few small companies that have production that if you're in this environment, there may not be drilling in the short term, but the leverage to oil price increases is obviously the option. And with a background of a market cap of $10 million and let alone an investment in State Gas worth 17, we're trading like everyone, not down at our lows. However, we, as reported in our quarterly report, we've stated that we have 11 quarters ahead of us that we're funded for as an operations now. That being said, I will say that obviously some of these work programs and drilling programs is a slightly different business model that would potentially require, depending on oil prices and our profitability, the need for additional capital, but that's part of the opportunity at the time. So that's about me. I think we've got the notes that are standard for people to read. I won't read those, and our disclaimer on our forward-looking statements. That's it, and that's the platform late in the afternoon in the West where the sun goes down.
Thanks, Rob. Thanks for your time. A great story, a contrarian story at the moment, but sometimes that's where the money's made, particularly when you have a market cap of 10 million and have assets in listed shares of at least 17 million plus cash and obviously your oil assets. So